Hello and welcome to Blythe Business News. Today I'm joined by Ron Heeks, who's Managing Director of Larvotto Resources. Larvotto are listed on the Australian Stock Exchange, the ASX, and a symbol of LRV. Ron, welcome back on the programme. You've just completed the preliminary feasibility study, the PFS, for the Hillgrove Gold Antimony project. It's showing some pretty impressive financials. Look, let's tell us about the PFS and tell us what's driving those financials, please.
Yeah, thanks, Tim, and thanks to be back to give everybody an update since we last talked. Yes, PFS completed this week. The numbers are very, very good. An NPV of 261 million and an IRR of 80%, and that's at our base price cost, which is 2,000 US gold and 15,000 antimony, at a spot price of 24 gold and 23,000 antimony. Gives us an NPV of 584 million at 173% IRR. So, quite exceptional when you look at this at spot prices. We produce 80,000 ounces of gold equivalent, and remembering that we're both gold and antimony, so we tend to speak in gold equivalents. So 80,000 ounces of gold equivalent at 6 grams gold equivalent. So that's about 40,000 ounces of gold and 5,500 tons of antimony, which economically is about equal weight. So that's pretty good. Payback on our base case is 2 years. At the current spot, it's less than 1. And really interestingly, our all-in sustaining cost is 236 million. And at the current spot price, if we do that, we actually have a negative all-in sustaining cost. So the antimony cost covers all gold production. So our gold is essentially free. So that's a pretty interesting metric. For us, it's 7-year mine life as it stands. There's absolutely no doubt that that will extend. We're really only touching base with half of our current resource. The reserve, our initial reserve, 600,000 ounces at 6, but our resource is 1.4 million at 7.4. So there's a fair bit to go before we even start touching our exploration upside. There's a lot to go here, but this is our initial study.
Okay, thanks for that. Now, looking at Hillgrove, I know you've got existing infrastructure at the site. Just talk us through what that means in two terms, de-risking the project, I suppose, but also what does it do in terms of increasing the speed or reducing the time to first production?
Well, look, it significantly de-risks the project, and it also reduces the capital. So for us to go into production from where we are is 75 million Oz, and all the numbers I've mentioned actually are Oz. So 75 million, which is, arguably a quarter of the cost of what it would cost you if it was a greenfields project. We have the mill there. We have $150 million of underground development. We're already connected to power. We don't have to build a camp. So all the normal things that would normally be high risk, we don't have to do. What it means is that our DFS is actually nearly done. We're totally focused on tweaking the metallurgy at the moment. Our underground studies really won't change much. Most of our surface studies won't change much because that infrastructure is already there. And because of that, we would expect our DFS to be ready within the next 6 months, which in itself is really quite exceptional. And the PFS, has come out 7 months after we acquired the project. So we're moving along at a fairly good rate.
Okay, now you mentioned the definitive feasibility study there, the DFS, and you said it coming along very soon. What are the key steps you've got to take to get to the DFS?
The fundamental one is our metallurgy. We know what the plant can do and what has previously done. We are doubling the size of the plant. That's actually not a great task. It's only about $15 million to do that. So again, not a huge risk. A lot of that gear is actually already on site, so we just have to install it. So again, a de-risk. what does it do to allow us to move forward? It allows us to go forward very, very quickly. And it's all about the metallurgy. Because we know what the plant has done, what we're doing now is just tweaking. We're looking for an extra 2 or 3% on the recovery to get it up into the low 90s. Within our PFS, we've been very conservative. We've used recoveries in the 80s, but we're pretty confident we'll get it up. So we're very confident that will happen. So that's really the only outstanding issue for us, to tweak that. And we're not reinventing the wheel there. We're just tweaking. Everything else is largely done. So we are in really a quite unique position.
Okay. Now, anyone looking at the gold and antimony markets will see there's a rising demand for both. Are you going to be able to leverage those trends at all?
Oh, absolutely. If you look at our spot numbers on our PFS, which is on our website, they're quite stunning if you put the spot numbers in. And the antimony price has more than doubled in the 8 months that we've had the project, which is exceptional. Gold has continued its upward trend. We leverage on the Aussie dollar as well. And in the PFS, we've used 68 cents. It's currently 65. So there's another few percent that's in there. And that just goes straight to the bottom line. So again, quite conservative in what we've done. It just, it's a very good story. And certainly the demand, particularly for antimony, is increasing. Production around the world is decreasing. The demand for it, especially its use in solar panels, is driving the market. And I think everybody will agree that solar panel production is just going to keep going up. Everybody wants it, and it's a good thing. So that's the big driver of the antimony price at the moment. And so we see that trend continuing for a long time.
Okay. Final question from me. We've talked about the DFS, which is clearly not that far away. Is there anything else that viewers should be looking out for in terms of news flow in the coming months?
Well, we start drilling in a couple of weeks. In fact, we received our environmental consent to do that today. Took a little bit longer than we'd like, but the rig will be on site in a couple of weeks drilling. That's at Clark's Gully. We look forward to putting some good results out from that area. A couple of weeks after that, we bring on a second rig, which is a diamond drilling rig, and it'll be drilling the Clark's Gully mineralization, and that's the super high grade stuff that we've previously announced. Sorry, Baker's Creek mineralization that we've previously drilled, and the last intercept we had there was 30 meters at 60 grams, so 2 ounce material. So pretty spectacular grade, and we'll be back into that area shortly.
Okay, Ron, thanks for that. Come back and keep us updated, and we'll see you in a few weeks' time, I hope. That was Ron Heeks, Managing Director of Larvotto Resources, giving us a quick overview of the PFS and outlining the next steps towards their definitive feasibility study. That's it for this edition of Blythe Business News. Thanks for watching.